Welcome back to Magna Meets, and on today's episode we're about to dive into the world of financing with one of the industry's most popular brokers today, with such a fascinating path from banking telesales to navigating the world of redundancy, to even owning a restaurant. His name is synonymous with being an absolute stallion within the industry. If you're wondering where's Shaz, he's here. Shaz, welcome to the podcast.
John, thanks for having me. What an intro. Thanks.
Thank you very much. And we were just talking off camera there about how many of these you've done so far. What number you on at the moment?
This is number 32 of the year so far.
Wow. Okay. And did you set the year with the ambition of doing this many?
It's been quite organic. Like, I don't say no to much, I'll be honest. So I say yes to pretty much everything.
Yeah.
I think that's what's helped. And obviously, as I've done one or two or three or four, you get noticed and people then approach you even more.
Amazing. And for you, is there a particular reason why you're so keen on the idea of putting your name out there?
You want to be seen and you want to be kind of known for a certain thing. So by going on podcasts, talking about the same thing again and again, might seem tedious to me, but like you said off camera, there's different audiences who may not have heard that content.
Absolutely.
Really helps them. And also, think mortgages, think Shaz. That's not even a slogan I thought of right now, but in essence, you want to be the person people think of when you think of finance.
Agreed. And look, I came across you on social media, so it clearly works.
Yeah.
And
can I just interrupt and say, by the way, the way you approached me on social media, John, was amazing.
Okay, good.
So guys, if you are approaching guests, do your research and be very kind of personal and approach them in the right way.
It's probably taken you 12 years to get to this point,
Uh-huh.
and we'll touch on that. But for the audience that are watching today and those of who don't know who Shaz is, what is it you do? Shaz?
So what I do right now is I work in finance. I help property investors who want to start, scale, or grow their property portfolios. When they need lending, now lending for investment finance generally is not on the high street. It's more specialist lenders, people you may not have heard of. That's why I come in. I can kind of find you the right deals based on what you need, what you qualify for, and put you guys together.
Amazing.
That's in a nutshell what I do.
Yeah, great. And what does a typical day look like for you, Shaz?
It depends. So if I'm doing this kind of thing, I'll be on the road or in a train or in a car to Midlands.
Yeah.
Podcasting, recording. That's one typical day. But you know what? I'm really efficient with my time. So if I'm in the office, I'll get to the office about 7 o'clock.
Wow.
I live 5 minutes from my office. It's quite convenient.
Okay.
Because I'm there so early, the first 2 hours, no one's going to call me. So I get so much done. And I'll be honest, this is a bit of a secret. I'm done by 3 o'clock. I'll leave and just go home. I'll go to the gym.
Fine.
And that works for me because then in the evenings, I've got another hour or two. I'll just check my laptop, see what's come in. So from a work balance perspective, it really works. People say, are you really busy? Are you manic? And my answer is I'm busy enough, or as busy as I want to be.
Okay.
Yes, I've got more capacity, obviously, but if I start to take on loads more volume, it'll mess up my kind of balance I've got right now.
And is that something that you've learned over time?
Yeah, definitely. So in year one of when I went to specialist finance, self-employed, again, I was saying yes to everything, but I was making myself way too available. Evenings, weekends, WhatsApp, email, calls, anytime I'm your man, great. And it's good, people appreciate that, but it does set up bad boundaries initially anyway.
Got you. I mean, you said it in terms of balance, right? And it's striking that balance. I think a lot of people feel that because they're in the office and because they're sort of typing away that they're busy, but it's not about FaceTime, it's about efficiency, right?
Efficiency. So I'm very blessed. I've got a very good admin in the office. I've got 2 others in the Midlands. If they weren't good at what they do, I couldn't be doing any of this because I need to be on all hands on deck, right?
Okay, got you. Banking, telesales background, redundancy.
Yes.
Owning a restaurant.
Yep.
It's quite a colourful past.
Yep.
What has stood out for you in terms of those experiences in particular?
So I think what I've learned all through the journey is that people make the most difference. So whether it's in telesales, you're speaking to people, you're in a sales and marketing kind of job essentially. Yes, there's customer service, what's my balance, but really we're targeted on upselling them to different products. When I had the restaurant, you deal with customers coming in every single day, and of course the staff with you as well. So I think people make all the difference. You have to treat them well, you have to be able to motivate them, and they have to perform to their best, otherwise you can't grow the business even further.
I related to you quite quickly. I was watching a few of your podcasts that you've done previously, and you mentioned that your family were in the sort of business of corner shops.
Yes, so we had a corner shop and we used to live upstairs.
Yeah.
Which was great as a 6 to 10 year old. It's great, you got free sweets every day you want. But I think looking back, the shop was what it was. So my dad worked very hard, but in terms of was it profitable? Probably not. And I think mum does tell me now that, back then it wasn't great times. And we can tell as kids, but they never kind of made us want for anything.
Yeah.
But I think that time my dad could have used his efforts more productively.
What's the next step for you?
So my business, my actual brokerage has been set for a year. We were 1 year old like 2 weeks ago.
Okay, congratulations.
Thank you. Now, the aim, the short term and the long term plan is to grow the team.
It doesn't look that way, by the way.
It doesn't, because I think the foundations for that were put in place 3-4 years ago. So
Got you.
I was still self-employed, just under a different banner.
Right.
So all the networking events, all the social media, all the content, all the network on LinkedIn with different people, that was building the foundations, right?
Okay.
So when I set the business up, I was able to transfer all of that across, the image, everything across to this new business. So thanks, but that's what it was.
Mm.
But yeah, in terms of future plans, you want to grow the business, you want to get more brokers on board. So within my business, I've got 3 admin staff, but I'm the only broker. So I'm the one generating the business and processing it and making the recommendations. And that needs to be grown, because then you add more capacity, you can help more people, solve more problems.
Great. And look, talking of the world of finance, has it changed in your view, good or bad?
Yes, I think it has. I think there's a lot more, lenders are definitely a lot more risk averse. They want to protect their money. And obviously the cost of money has gone up, so they pass that on to people as well and clients. I think there's a lot more checking done up front to make sure deals will definitely be proceedable. What you don't want is to go through paying valuation fees, legal fees, and then something that could have been checked on day one isn't. So whilst it's frustrating as a client, you might be like, why are you asking so many questions? Well, if you ask this now and it falls outside, at least you know now rather than 3 months down the line.
Got you.
So there's a lot more stringent policies and questions in place, but I think it's for the best.
And look, I guess you get it a lot, clients trying to sort of predict the market, good time, bad time. Do you have that view? Do you feel that there's always buyers regardless of time of the market?
Yes, definitely. I think, look, so when people say, what's your views on the market? I'm not an economist. That's a completely different ballgame. But there's always deals to be done. So as a broker, and this isn't, during COVID lockdown, that was a very profitable period because there were deals to be done. Now, the trustonomics, or whatever you want to call it, people are still doing deals because house prices are coming down. So investors who are perhaps a bit more liquid with cash, they can use that and use bridging finance together to get deals done. So we're busiest right now, less with new mortgage or buy-to-let purchases, but very busy with bridging.
Okay.
People are hedging their bets. In 9 to 12 months, rates will be coming down, and they've got this project where the value's gone down as well. So it's very active still.
Okay. And for those who are unfamiliar with bridging, can you just give us an overview?
Yeah, sure. So a mortgage is a longer term product, 25, 15, 20 years. Bridging is a short term solution where you can do a renovation, or you're going to buy something with a view to refinance or sell it to add value to the property in between. It's also very useful for auction finance. You get it in 3-4 weeks as opposed to months on mortgages.
Fine. And look, you're very active on the networking scene.
Yes.
And you're a huge advocate of networking.
I am, yes.
And naturally you're bumping into a lot of people, those of whom are promoting educational courses and courses in general.
Yeah.
Keen to get your take on this, Shaz.
It's changed, to be honest, John. This has changed a lot. So when I first started getting into networking, I don't know what networking was, by the way. I thought networking was Avon or something. Right. When I go into networking, you meet a lot of people. You never know who's in the room. You don't know who they know. There's definitely lots of benefits. But in terms of education, it's changed. So a lot of the bigger education companies like PIN, PPN, since lockdown, they've died down because the numbers aren't there.
Right.
But there's been a lot more now people coming in who've got maybe 1 or 2 years worth of experience, and suddenly you're getting mentees and offering training.
Yeah.
So you have to be very careful about who you're going to take coaching or training from. And I think my thought is ask as many questions as you want, because if someone's offering to take you under their wing, you should be doing your due diligence and before you part with your money. I think what's not being done is a lot of pre-qualification.
Yeah.
So if I want to charge you £10,000 for a course, I should really make sure you're in a position to spend £10,000, and if that money went nowhere, you're still going to be okay.
Ethically, right?
Yeah, but I think that's wealth creation in general. It's not just property courses, there's forex trading and all this kind of stuff. There is no regulation. But then it's supply and demand. People want easy fixes, get rich in 7 days. So it's supply and demand. But do your due diligence and ask the right questions.
Tends to be, from what I can see, as the most vulnerable pool of clientele potentially.
Because they want to get rich quick.
Yeah, agreed. And don't get me wrong, I'm sure there are courses out there, there are mentors that are great at what they do. but a lot of these are great salespeople.
They are. Look, if someone's offering a course and it's like the inner circle, but there's 50 people,
Yeah.
that's quite a big circle, right? How much
True.
time and attention can they give you?
Yeah.
Whereas if it's an intimate group of 15, then yeah, fair enough. So definitely do all the research, ask for testimonials, who have they helped, how many millionaires has this actual course produced? You know, do you know what I mean? Those are the questions you should get.
It's true. And logic, right? You know, a lot of these free courses, well, they have costs building up to this, right? From the venue, from the material. So it's not as straightforward as what it might seem.
And also the other thing just to add on that, John, is if the trainer or the coach, if they seem to be making more money from coaching than actually the property business, that's a red flag.
Which is very easily done, right?
Yeah.
Look, in your world, what are some of the most common misconceptions about property? Break it down if there are.
Property, yeah. So that it's get rich quick and it's passive. I think those are definitely the two. It's definitely not get rich quick. You know, people buy property for capital appreciation as well as cash flow, and there's normally a 13-year cycle with property, so values will go down before they go back up. So it's get rich in 13 years maybe, right? You need to look at different strategies like multi-unit blocks or serviced accommodation or HMOs, but then they come with more hassle. In terms of being passive, it definitely isn't. You know, if you're not hands-on with the property, you're dealing with people, managing agents and so on. So you'll always be needed at some point to deal with the property. It's not passive and it isn't.
So it's just accepting more realistic returns, right? And looking at this very much with a long-term outlook. And a common strategy that I keep seeing flagged around is the buy, refurbish, refinance.
Yeah.
How often are these executed to the sort of theory that they're set out on?
In my world, a lot.
Okay.
So I'm based down in South Wales. Most of my clients are from the Midlands, but I do get a lot in Wales as well. Now, in Wales, you can buy a whole street for like 100 grand, right? But no, you can still buy a property for 65, 70k, spend 25, 30 on it, and it still will value up 120, 125.
Okay.
So those deals still exist. But then if you're based in London doing that, suddenly you're going to have to pay like a sourcing fee, project management fee, and suddenly the deal isn't that good of a deal.
Got you. So your margin diminishes.
Yeah.
Okay. So they are out there. They can be executed to the theory, but you've got to look at the bigger picture, which is the logistics involved. There's the devil's in the detail, right? Okay. What do investors in today's market need to be most aware of? Is there a fear factor? Is there a red flag that you're bringing to the sort of spotlight to your clients?
So the main thing I'm finding lenders are being a lot more cautious and questioning of is the kind of clarity around proof of funds and source of funds. So when you look at your deposit, proof of funds, do you have the money? Yes, here's 3 months bank statements, I've got enough money for the deposit. And that's easy enough, right? Source of funds, where has that money come from? And that may involve you having to get 6 months to a year to 2 years worth of bank statements showing the trail of money.
Wow.
So you could say, well, I had this money 2 years ago, it was like a payout from the insurance claim, here's a bank statement. Okay, where's that money gone since then? Because it's gone back and forth, they want to trace that money, right?
Right.
It's to avoid anti-money laundering, and normally it's the solicitor's job. But I found lenders nowadays, that's the thing they check it up for themselves.
Yeah, it's quite hot at the moment, isn't it?
That and also credit reports.
Okay.
I've posted about this many times. CCJs, in the UK, it's so easy to get a CCJ, especially parking tickets and things like that. If you ignore the letters, you get a CCJ, simple as it. For 6 years, it'll impact your lending.
Fine. And if there are people out there with those adverse credit ratings, lending's still an option for them?
Yes and no. So if you've got a CCJ, for example, and it's been settled, first of all, pay it off, right?
Yeah.
If you're looking at a buy, refurbish, refinance project, like you said, the buying with a bridge is easy enough, but can you get a remortgage on the back end? There are less lenders, and there are certain tolerances on amounts and where it was settled and where it was put on place. If you're looking at flipping, so you're buying, renovating, and selling, that is quite easy because you don't have to have good credit to sell a house. So it depends on the project, but there will be less lending involved.
Got you. And look, Shaz, what excites you the most about what you do? Where do you sort of shine the brightest?
So I definitely like meeting new people. So it's the first time we met, and I'm sure we'll keep in touch. I like meeting new people. I like solving problems. I think when people say, what's your purpose or what's your why, I think for me, we're here to help other people. So if I can help more and more people, even if they're not my clients per se, I can help them in other ways. That for me ticks my box and makes me happy every morning.
Fair enough. And look, there aren't that many people that are wired in that way. But from what I've understood and the content that you put out there, and I think just generally the authenticity that you give off, is you're looking at things with a view that it's never just a case of short-term take. You're willing to put stuff out there knowing that property investment or the journey that we're on is a long path.
Yeah.
So at some point you might cross paths with that person again,
Mm.
and you realize that it's a return on investment.
Yeah, definitely. And like, so I look at like a triple threat method or 3 touch points to get clients. So that is networking at events, networking online, just DMing people and having a conversation. That's
Yeah.
all it is. There's
Yeah.
nothing more than that. And then branding and posting on social media. Now, that works full circle every time, because by the time they meet you in person, they've consumed some of your content, or you've DM'd them online, or if you DM them online first, they may have met you. So it all goes full circle, and it's just an easy conversation to have when you have that conversation. And yeah, look, not everyone is going to want to work with you. That's the simple truth, right?
Yeah.
But you can still be a human being and have a conversation with people. My DMs or my WhatsApp, often I get messages from people who met me 6 months ago, 9 months ago. They kept me in mind. They weren't ready then, they're ready now. You've got to kind of just be open to that.
You're in a room. You're networking.
Yes.
What's your mindset? What's the end goal?
The mindset is, I hope no one talks to me. I'm very shy.
Are you?
Not. Yeah. So I think the mindset is just to speak to people, and I like to play little games in my own head, just to like keep it entertaining.
Yeah.
Like, how long can I have a conversation without mentioning what I do?
Okay.
And just keep like batting it back to someone else again. Because people often say, "Hey, I do this. What do you do?" I'm like, "I'll tell you in a second. Tell me more about what you do."
Fine.
It's just little games in my own head to keep it entertaining. I really enjoy plugging people together.
Okay.
So if someone says to me, "I'm really here to see, a letting agent," I'll find someone and introduce them and let them crack on. It just eases me having to have a conversation.
Okay.
But look, I'm fortunate to be in a position where at some events I go to now, I'm kind of recognised, I'm saying it in a nice way. So again, it's an easy conversation. Hey, we know you online, or where's Shaz? We found you, which is wherever. But so that's an easy conversation because you can just talk about what the market's doing. But I think the aim is just to meet and just touch as many people as you can. Just put yourself in their mind.
You're going in there with a very much a relaxed and just be yourself mindset, right?
Yeah, listen, John, I've been to events with other brokers, and I'm very friendly with other brokers, where they shake someone's hand and they just swap out their card. And I cringe. It's just like, why would you wouldn't do that to someone in the street, would you? Like, just give me your card for no reason, without any context.
Yeah.
I couldn't do that, and secondly, it's not the way to approach business.
On the flip side of it, I'm assuming you're also not adverse to saying no.
If people can't fill in forms properly, right, I can't help them. It's simple as like, in terms of, I can't be sure what I'm presenting to them fits what they need because they've not filled in the form. So if someone 2 or 3 times after me going back and saying, please fill in the form, they can't fill it in, I'll politely say, no, it's not working.
Yeah.
The last thing you want is to be annoyed at me and I'd be annoyed at you. It's just not a long-term relationship.
You value your time, you value your mindset.
So I don't say I've sacked clients, but I've kind of just said, look, politely, we're not going to get on. So
this leads me on to the next point I want to raise, which is throughout your experience as a broker, you will have come across, or in fact, you play a massive role in sculpting successful portfolios.
Yeah.
Right? I don't know why I've done that, but it's true.
Yeah, it's true.
You have. What's been the standout for you in those people that have built those successful portfolios? Is there a recurring theme that you're seeing?
Definitely. I think when working with me, it's trust.
Okay.
So we mentioned it just off air. So my kind of most prolific client, as it were, is a guy called Ted Singh. He is from London, based in London, and over a period of 9 months, he's bought and refurbished and refinanced 15 properties.
Okay.
Now, he hated brokers before he met me. We work together, and he still hates them. Right? Tolerates me, but the trust factor is he sends me the deal. I send him, based on everything else, what the best lent deals are, and he says, yeah, go ahead with it. Where there's a lack of trust, you get people going, oh, is this the best deal we can get? And it's like, well, why would I send you something that isn't?
Yeah, true.
Another kind of lady that I've worked with quite well is a lady called Charlotte Edwards, accidental female developer. Not sure if you've seen her on.
Yes, yeah, I think we follow her.
So again, she's built up a bloody whole postcode, right? And again, she'll email me, I'll send her the deal, and she's like, yeah, well, if you think that's best, I trust you. So trust, I think, is very important because it means you can be very speed efficient and things just get moving really quickly.
Is it quite easy for a broker to advise someone on a product when actually it benefits the broker more than the client?
Potentially.
Okay.
I wouldn't say I've come across this very, very, very often, maybe 1 in a million chance, but certain lenders will pay, so all lenders will pay brokers a procuration fee upon completion of mortgage.
Right.
So it's a percentage of the loan size. Some lenders will pay more, so there is that chance that perhaps if a broker is incentivized that way, they might do it. I don't think it happens all the time. Look, brokers charge broker fees, and there's all these fees they charge up front to get to that point. But yeah, there is always that chance.
What aspects of your job frustrate you the most? You mentioned things like forms, right? Not filling out forms, right?
Yeah, I mean, I think look, for the ideal deal to work, and the recipe is I've got all the facts about the client, all the facts about the property, and off we go. But if you can't spend half an hour, if you can't literally invest half an hour of your time to fill the form correctly, then it just means you're longer term. It's not going to work, right?
Yeah.
So yeah, I think people just missing details, or I've had instances where, it says about income details, and it'll just say, "See my payslip." Well, you could just type it in there. Do you know what I mean? It's not. I know it's a bit of effort for me, and I'll do it, but it's just like, why would you be difficult?
Yeah.
So I think it's the aspect of working together. So these investors, they are running property businesses. They're not part-time. It's a full-time thing. And the brokerage side of it should be the finance part of their business. So that's how it should be treated. And realistically, guys, look, once you fill in the form once, you don't have to update it unless something changes. So it's worth the effort in the first place.
Yeah, great.
The other thing I'm finding a little bit frustrating now, more than anything, is because rates are changing so frequently. Previously, this time last year, maybe once every month you'd have a rate change. Now, once every 2 weeks.
Wow.
So if I recommended you something today, you might want to speak to a business partner or something. That's absolutely fine. But if you're going to take 2 weeks to come back to me, the rate's different. It just, again...
And then it's not your fault when it happens.
Be a bit more decisive with the decision making, right?
Right. Where does your self-worth derive from? Can you pin it down to one thing, or is it an accumulation of things over a period of time?
I think... Look, I still am a people pleaser, and I really care what people think. So I know there is kind of a mindset where I don't care what everyone thinks about you and crack on. I'll be honest, I really care what people think. So I want people to like me. I want people to value what I'm doing. So my worth has always been, am I a valuable person? Have I added value to someone's life today? So I'm on this podcast. Hopefully this will be a valuable podcast, and with that I'll just tick that box, right? So for me, it's about being valuable. There's no tangible measure, of course, but that's what kind of makes me tick is, am I able to add the most value in a selfless way?
A lot of the time the focus is on the rates.
Yes.
Cheapest rate. What's the best rate? Is there something else?
Of course, especially again now, fees. So as the cost of the money has gone up, rates have gone up, but also application or arrangement fees have gone up. So typically you'd normally pay a 2% arrangement fee. These days, anything up to 7%.
Wow.
And that can make all the difference, right?
Yeah.
So it's often worth comparing the lowest rate irrespective of the fee versus the lowest cost over the fixed term, because when you factor in the fee, it might actually make a difference. Like there's lenders doing 7% fees. Now if you spread that fee over 5 years on a 5-year fix, you're actually maybe paying more than what you should do. So it's worth comparing total cost versus
beneath the surface.
Yeah.
So sometimes actually the higher rates are actually probably better off for the client.
After a certain loan size amount,
yeah,
then yeah, the higher rate with the lower fee actually would make more sense.
What is there a cut-off, Shaz, in terms of a sort of sweet spot that you wouldn't necessarily recommend an investor putting any more cash into the deal to sort of lower the rates or get a better overall deal?
So again, traditionally there's loan to value brackets, right? 65%, 70, 75. But the difference now is so minimal, and I think this is worth highlighting as well, is the difference in costs of funding is just shrank completely. So previously you'd have kind of slightly high street lenders like Birmingham Midshires, right, doing a buy-to-let mortgage, 2.5%, yeah, or the mortgage works 2.5%, 3%. Now they're all at 5.5%, as are the non-high street lenders. So the difference in the cost of money is just not there.
Yeah.
The same with residential mortgages. Typically, you'd always say borrowing on your residential is the cheapest form of borrowing, and it used to be. But when their rates are 4.5%, 5%, it just doesn't make any difference. So there is no sweet spot anymore. It's just what works for you.
Perfect profiles.
Yes.
Do they exist?
From a client perspective.
Yeah.
Yeah. Someone who has all the documents ready. Someone's got their income documents ready, got their bank statements ready. Just someone who is proceedable. So, for example, on bridging, I get people asking me all the time, "Hey Shaz, how quick can this be arranged?" And I guess my bounce back to that is, how soon can you be ready?
Yeah.
Because it's no good me saying 3 weeks and you take a week to come back and count that week as part of it, right? So you got to be ready, which means, are you able to pay the fees? Are you happy and ready to pay the fees? Have you got your documents ready? Got your proof of bank statements? Got a source of funds? Have you got all that ready? Because the clock starts then, not when you want to think about it.
Can you talk us through a bit of a timeline So assuming I've got a property,
Yes.
I come to you,
Mhm.
what then happens at that point?
So, okay, you come to me, you filled in your forms.
Correct me.
No, you filled in your forms, and I would then take normally 1 or 2 days just to research, come back with the recommendations and the fees and the cost. You, yeah, fine, crack on, let's go for a 5-year fixed rate, let's do it. I would then hand it off to my admin, who kind of does the processing. And then, in theory, the case should be packaged well enough that there's not much back and forth, in theory. But, what lenders are like. So they may come back and say, okay, on this bank statement, we notice this transaction, can we get more information? Or just some requirements.
So is there still that level of scrutiny with bridging finance as there is
Sorry,
for...
so with bridging, actually, it should be quicker. So with bridging, they still will check bank statements, because if there's large payments coming in and that's being used towards the funding, they want to understand where it's from. But on bridging, yeah, so you'd send me, it's a 1-page inquiry form.
Okay.
What you're buying, what you're doing to it, what's the end value, how you're going to pay back. Simple, right?
Yeah.
With bridging, it's more relationship based, as opposed to there's not like a product sheet. It's all about relationships. So I would approach 3 or 4 or 5 lenders who have that sweet spot. So bridging's really interesting. So bridging, if it's a certain loan size, if it's quite a small loan size, you eliminate a lot of lenders. If it's like a commercial property, some lenders don't do commercial. So it's all about experience and relationships. Approach the lenders, they'll normally come back within a day or 2 days with their quotes. We present that to you, run it through with on the phone, and if you say you're happy, then yeah, there's initial documents. Now, they might ask for income docs, bank statements, proof of income, the usual stuff anyway. Once that's all been submitted, you have the option of saying, yes, I want to pay for legal fees now, just to get it moving quickly, or you can say, look, I'll wait for legals, let me get the valuation done, because if that comes in under, it's not worth me starting the project. Once the fees are paid, it's a little bit of back and forth. I think bridging lending is smoother, it's slicker, and it all hinges on the valuation. So what happens with bridging is you've got to have a schedule of works for the work you're going to do. If that gets given to the surveyor, when they go out, they'll comment on the current value. Are you buying it for more or for less? Does it actually fit? They'll then look at your schedule of works and just comment on that. Is that accurate? Has it been costed properly? Do you need more money, less money? And then also, based on those two things, they'll comment on the end value. So if this work was into this property, it'll be worth X at the end. As long as that all stacks up, the lender will be happy to issue formal heads of terms, and you go to legals. Solicitors can sometimes be the slowest part of the process. I don't want to neg on solicitors. This is not the right conversation.
We love our solicitors.
Yeah, but I think with solicitors, you have to be on at them all the time. You have to pay for the expertise, so pay over the odds. Pay more than what you think you're going to have to pay.
I agree.
To get it done. And yeah, 2-3 weeks is reasonable, because a lot of bridging lenders can do indemnity policies.
Okay.
So instead of full searches and full kind of this and that, full reports, they can just indemnify it. But the deal has to work. It's all about numbers on bridging.
And costs? Can you sort of dive into costs a little bit? I know they might vary.
So at the moment, as we speak right now, 2% arrangement fee to get into bridging. Interest rate about 1.1% a month. Now that has gone up. So again, last year you will probably get at 75% loan to value rate of 0.75. So there has definitely been an increase in cost there. You get charged a valuation fee, anything £500 to £1,000. Broker fee, again, anything from nothing. Some brokers don't charge up to like £1,000 or maybe a percentage. Then you've got your legal fees. Now, you'll always pay for your lender solicitor, which is going to be £1,200, and your own, so double that.
You will have in your circle come across a lot of third-party lending. Social media, people reach out on social media for JVs and financing. Can you run us through that, Shaz? What does that look like?
I'd rather not, John, because it's a murky area. Honestly, the FCA are getting a lot hot on this.
Right.
Technically, you should not be on social media offering people a return for their money,
right,
without qualifying them as sophisticated investors.
Okay.
So sophisticated is the word the FCA use. I don't use that word, but it means they've got the financial means to invest that money. They have a certain net asset wealth, and so on and so forth. So when I see posts or stories saying I need 100 grand for 12 months or 6%, if the FCA saw that, you'd be in breach because you're not FCA registered.
By simply putting out a post.
Because you're not pre-qualified,
Yeah,
the way you're marketing it isn't. It's just how these people come across you, right?
True.
But can you use, if you've successfully raised that money, can you use it towards a project? On bridging, definitely yes. I see it done all the time. So bridging lenders, because it's unregulated, are able just to take a view and look at it, but it has to make sense. So they will ask, how did person X, no person Y, and why they give them £100,000. Often these loans are unsecured, just with a personal guarantee. They also make the investor sign what they call a deed of subordination, which is a legal document to say I have no interest in the property. It's just a loan to the company.
Right.
So actually, the investor hasn't got much protection at all, right? Because if you've got no assets, your guarantee means nothing. But how you use it is, again, go through a solicitor, and the solicitor should do the anti-money laundering checks. The bank statements, source of funds, ID, where's that money come from? Because if you've got foreign investors, potentially they're on some sanctions list, you don't want to be touching that money. But it's possible.
Yeah.
With regards to JVs, that's different, because if it's a joint venture and you're both taking ownership or part ownership of the property, that's different. You've got an element of risk involved. The other thing to avoid, and I'm just kind of speaking from FCA guidelines, is what they call a CIS, so a collective investment scheme.
Right.
So if you're raising money from multiple investors for one deal, that falls basically into like crowdfunding in the system.
So people are pooling their money, putting it into a pot, and then the head of that pot just goes and
exactly, and that kind of has an element of crowdfunding, but without equity. It's all a bit messy. And what the risk is, let's say you've got 5 investors for one project, you delay paying them back because your project's taking longer. It takes one of them to complain. Suddenly you've fall foul of FCA, and there's a prison sentence on the back of it.
Oh wow! So, and this is the thing. It seems logical, right? You know, you've got 20 grand, I've got 20 grand, he's got 20 grand. Let's just put our money in together. But it can be sort of seen as a
if we were close friends,
right?
It's different. But if we're raising that money from social media without knowing people,
right?
It just, you shouldn't be doing that.
And is there a line between us knowing each other and us not knowing each other? Is there a particular rule or?
There's no rule, because so far no one's really fallen foul of it. I think there's a few articles coming out now because deals have gone sour and people have started complaining.
Yeah.
But it's a case of protect yourselves. If you are raising money, the way to do it essentially is, I need money for a project. Please, let's have a conversation, and then pre-quantify them on the phone call.
Okay.
But don't offer returns without understanding.
That's really useful, because I've seen it a lot, and I just thought it was just normal, right? People on their sort of descriptions or their bios are saying, you know, I can give you 10%
I offer a
returns.
bank beating return.
Yeah, exactly. And I'm sure people buy into that, right?
And well, the logic is sound. You know, if you've got 50 grand in the bank and it's giving you 0.1%,
exactly, it's
eroding with inflation. So give it to me and I'll do this. That's fine.
Especially if they're standing in front of a Ferrari, like wearing nice watches.
Me having a cigar.
Yeah, exactly. You've mentioned bridging as a particular avenue. Are there particular products that aren't widely known that are really benefiting your clients at the moment?
Yeah. So if you're in the kind of fortunate position where you've got an asset or a property with no mortgage or a small mortgage, there are lenders who will offer you what they call like a hunting facility. Okay. It's kind of like an overdraft. What they do is they'll value that property, do all the checks, do diligence, make sure they're happy, and they'll give you a facility up to 75% of the value of that. You don't get the money, but you get the option of having that money. So you could go to auction, and if you like something, you just buy the property and draw down the money.
Right.
There's no further checks because it's all secured on that other property initially. Now, it means you can recycle the money fairly frequently. You can do 2 or 3 deals at once, and you're saving so much money in fees because you've got that facility agreed. That's like revolving credit. So now I won't say it's popular because not everyone's in that position. Yeah. If you are, it's handy to know that.
Got you.
What I'm doing a lot of lately is what they call second charges. So you might have a mortgage on your main residence listed with Halifax, but actually you've got a lot of equity in that property. You need 50 grand to buy another house. Instead, Halifax may not let you do it. You can approach Halifax, and most high street lenders, right, they don't like lending for business purposes, and they tend to class buy-to-let acquisition as business.
Yeah.
So instead, you do what they call you have the option, you can either remortgage to another lender, but again, you might be on a really attractive rate at Halifax. You don't want to lose that rate. Then you might want to look at a second charge. So second charge would sit behind the main lender, so taking more risk. It'd be a higher rate, of course, but they're also more flexible and more quick as well. They'll give you the top up, second direct debit is set up. You can use that money, pay it back early, but you have to make monthly payments in between.
And these are things that you don't typically see online, right? It's only conversations like this with a broker.
You know what it is? They're hard to talk about. They're not sexy in a way to market, I suppose, but maybe that's a challenge from...
Yeah, well, look, it's been really useful having you on, Shaz, and I'd love to have you on again. I think there's definitely scope to talk about more things that we haven't necessarily brushed on.
I think, follow me on social media at West Shaz. I'm always posting stuff and content, and who knows, I am planning an event actually end of the year.
Okay.
It's kind of low-key, but end of the year or Q1, it's going to be in Manchester, and it's going to be all about business, social media, property, finance.
Amazing. And I'm assuming I'm going to be there.
You're on the guest.
Awkward if I'm not.
Go fill in the form.
Shaz, it's been an absolute pleasure having you on.
Cheers, John.
Thank you so much for your time, and all the best for the future.
Cheers.
Thanks very much.
Ta.